following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And we're looking at our S&Ps just to get right into it. Excuse me. We talked yesterday about this 2039, 2040 area. Got a couple of good little moves off of there. A little bit of a noisy situation. Middle of the day, reached a low of 2036. But this was kind of the profile that we were focusing on, trying to rattle back up into 2052. And I think after we talked about it, we reached a high 2051.75. So again, we're just trying. The reason I'm showing you this is not to go, hey, look at what we did yesterday, but basically to kind of let you know that this is kind of how I run my trading day, is to try to. Somebody had called yesterday about, how would I drill down into a day trading concept? And what, again, just to repeat, is I kind of look at the long-term situation, and my long-term situation is pretty much dictated for the most part on two different time frames. I'll look at the 240s and the 60s here, but my kind of MO, if you will, is dictated by these dailies and weeklies a lot. And when I look at the 240s and 60s, that gives me kind of an indication, so to speak, that some things may be rolling over quicker or rallying quicker, a little bit of a lead time there. But as I look at the action, and we had talked about, and let me spread this out so we can see it. Actually, this is our daily. We had talked about being a little bit overextended, not to just continue to try to buy a 5% move up, but we also talked about trying to look at this as we may be crowding this inflection point because of this situation as we look at it. And hold on 2 seconds. Let me just alert somebody on my team. Let's see. Excuse me. And as we look at this, we're kind of crowding back up into that 2052, 2053. We've actually breached it pretty well this morning, 2059. We don't have to go higher, but I think the leverage on the day trading side and on the intermediate and long-term side, excuse me, still is on the long side. And therefore, I'm looking at situations like this to try to use the 240s, because this is kind of the next time frame down for me, to use some of those shorter term inflection points if I'm going to day trade, to look at this 2039 area is kind of the Maginot line, if you will, to try to pick a battle. And we talked about waiting patiently yesterday until that happened. And we caught some decent moves day trading off of it. And obviously this 2036 down here was probably on a day trading notion. That was a little bit more of a harrowing experience that you want to endure from a day trading side. You got 3 points, 4 points maybe in your face there. You don't want to, give back too much. And again, the theme is lose a little, lose a little, lose a little, make a lot, as we talk about all the time. Now we've reached that 2052, 2053, and also the 2058, 2059 up here this morning. The fundamental news out, the Greece thing is, to be honest with you, that to me is just a news event to trigger some short-term trading. Greece is, a very small percentage of the problems in the European Union. They're going to have to put up or shut up, in my opinion. And I don't think anybody really cares if they exit, but it may be it may be looked at as a good time to fleece out some of the people that more than likely shouldn't have been in that union anyway. A lot of the attitudes are, fundamentally speaking, are different in European countries. The United States is a little bit more of a collective situation, getting to be more and more not a collective situation. But Europe, there's entire governments and societies that really don't jive with each other over there, and they're not expected to be honest with you. So that's kind of what's rattling this around this morning. And if I'm short, I always look at it this way too, just to kind of give another piece of the puzzle. God, I've got not enough days here. Let me pull this up. I had to reboot my computer right before the show here, so we are looking at not the best picture in the world, and that's my fault. As I look at this, and that's actually something good to let you know too. I had to go more days back to build profiles, so to speak, in the recent. And the way these profiles work is they collect information and project and forecast levels, if you will, for lack of a better term to use at this point. And those levels are those unfair lows, unfair highs, POCs, things like that. We need some, a little bit more historical action than 100 days back or 100 bars back to perform some of these math computations, if you will. There's a lot more things that go into it than just looking back in time at some bars. We've got some momentum indicators. Excuse me, I've been a little sick, and we've also, a couple of other things that are on the table when we form these, but we need some historical information to try to project some things moving forward and to try to capture the essence of what the fair auction might be. Now, the other thing I was going to say is I always look at this. Excuse me. After the next break, I'm trying to do something about this. I always look at things too. If I'm looking at the long side or the short side, I always say, okay, let's just say I'm short. Let's just say I'm short the market personally. And what am I going through if I'm short? And I'm not wanting to be short right now, by the way. But if I'm short, I'm concerned, and I'm a little terrified here that the train may leave again, and then I'm going to have to endure some more pain. And that's kind of the way I'm looking at some of these situations with the S&Ps right now, is I don't want to be short right now. And in this case, I know we were kind of inside the fair auction yesterday, but again, because of this leverage point here, I'm going to be looking at this, that it's probably, from a probability standpoint, a little better to try to buy breakouts and to try to buy support on the S&Ps. Okay, that's the dissertation on the S&Ps this morning. Obviously, excuse me. Obviously, the euro is going to react a little negatively to kind of what's going on here. And here's I will look at the NASDAQ also. Somebody just alerted me that. Euro, again, the gift that keeps on giving. You're going to look for constantly inflection points to sell on this, and you got some really good inflection points lately to sell on that. Let me pull into the NASDAQ here just to give some levels, if you will. Here's the situation on the NASDAQ. We talked about that 4210. We barely breached it yesterday. And we talked about that 42.8, 42.10 area. Excuse me. And this morning we've kind of backed into it again. And let's see if we actually touched it. 42.11. And now we're kind of rallying up. So this doesn't have to work out this way. And as you know, if you watch this show, things don't always, sound like the guy gets the cheerleader at the end of the movie every time. These things can go either way, but we're just trying to pick battles at the right place and trying to figure out, where's the edge? Is it better to be long, better to be short around some of these levels? Guys, we'll be right back, and I promise I'll get a drink of water here.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're looking at the scanner again, and some people had just sent me some notes that, why are the 60s and the 240 breadth indicators, why are they negative? Well, yesterday on the close we were kind of negative, and we're pulling back actually. And as you can see, these are somewhat closing situations across the board, because these are gauging the internals, if you will, and the internals, a lot of these internals haven't opened yet, and pre-market. They're getting ready to start rolling around. It's almost 8:30, and some of these stocks will start opening, so you'll start seeing some changes here. And unfortunately, they don't trade all night long. Did I say unfortunately? That might be fortunate, but they're going to start flipping around a little bit. As Tom was saying the other day, these dials are going to start spinning here. But what I did is I wanted to pull up the XLE situation, and there were some opportunities with this, and I still think there's some opportunities with it. Here's crude oil. Let's just take a look at this. And for starters, 5104, top of the box. And we talked about, is it riskier to try to trade crude oil from the long side of the XLE? It was a little less riskier and that's the way I always kind of look at things, is try to figure out, where's the edge and where's the chance to really possibly block out one side of the marketplace and take the least pain if we're wrong. The XLE, I'm going to show you that in a second, and then we're going to drill down into some stocks I think that still are decent place from alongside. One of the cool things that I started looking into, and getting some reports from some friends in the brokerage world that have some really big accounts from hedge funds, and talk to some people in Asia. There's a lot of hedge funds and a lot of folks out there that are saying that crude oil is going to go down. They've made huge bets that it's going to continue to go down, and some of this little squeeze factor that's already happened, and how it's kind of sitting kind of up here on a plateauish look here. That's probably scaring the ever-living daylights out of some of those folks. And to be honest with you, the hedge fund world, it was a great world to be in for a while. But it seems to me that those guys in the recent historical time frames have been wrong more than they've been right. I'll say that. And for these guys to start loading the boat and over leveraging themselves, and that's what generally they do. Excuse me. They've raised a bunch of money. It's not a Wild Wild West situation on what they can do with their trading, but they don't have the charters that a lot of times they have to go by in these big funds. And if you've entered mutual funds and the more traditional investment amalgamation tools, and I just lost my chart. I have no idea why that happened. Here we go. And the hedge funds usually have, if you just kind of go online and look at Google and look up a hedge fund, they'll usually have some phrases in there that kind of say, okay, this is what we're going to do, and this is our MO, and this is kind of what we do. And they'll usually have a comma, but, and then they'll have a phrase, but in certain market conditions, we will blah, 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 which basically gives them the right legally that you signed off on while entering that hedge fund to basically do anything they want to at any time in any fashion. And when you go to, I'm not saying people in hedge funds need to go to court all the time, but if it's a piece of paper that will stand up in court and in arbitration because you signed it. But they will put those little stipulations. So just word to the wise, if you're going to enter some kind of private placement, hedge fund, things like that, make sure you read everything, make sure you know what you're getting into, and make sure you ask questions. I mean, if those guys are going to accept some of your money and they don't want to answer questions, something's wrong there. So that being said, excuse me, and looking at crude oil, that's where we're at. That's kind of the 5104. We caught some good little bounces off of that already, and we talked about 5250 was probably going to be a little range you're going to turn around in up there, and that's going to be where you're going to have to call it quits down below there, in my opinion, if you're trading crude oil outright. But we're going to look at the XLE. We're going to kind of go back in time a little bit here. Oh God, let my charts populate, please. All right, well, we're going to pick it right back up after the break, talk about the XLE, and get to some oil stocks and a couple of earnings.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Thanks for bearing with me for the technical difficulties here. It's all my end and not TFNN, trust me. Here's XLE. We talked about crude oil kind of staying above that 51 area, and we also talked about some targets above 74.18 on crude on the XLE around 80. So we haven't closed above there. We're kind of mismatching around here above around that 80. We've reached a low this week of 79.72 and a high of 80.82. So I'd love to see this thing close above. And again, we've looked at this from the long side, basically because, crude oil kept making lower lows and the XLE was kind of hanging in there. And then we caught a chance to get a bid here around that 74.18, got a new profile up here last week. So no technical damage on the XLE in a long time. I hope that for the shorts, I hope this happens this week. But that being said, and crude oil could pull back. Don't get me, don't think it can't. But what I did is I pulled up the XLE stocks in the scanner, and what I did is I went in here and just chose the XLE. I'm not even going to do any filters, and I've been promising you guys that we are going to have paragraph mouse overs on the stock. That just became a little bit more of a exercise in technical prowess than we thought, but we've got it all set up, all the if-then statements, hopefully to give the dissertation as I would in a text format for you, and also a chart that I promised this week, that I'm still promising this week, that you'll be able to click on any cell and pull up a chart and see these levels painted on it. So this product will hopefully, with the breadth, the filtering, all the different 2,500 instruments globally, it's a very nice all-in-one product for you. But that being said, we want to look at a couple of things that we had been focusing on, and Anadarko Petroleum APC, as you can see here, I just want to pull that up and also go into quite a few others, Halliburton, Schlumberger, and ExxonMobil. So let's just look at APC here really quick. In my opinion, and we looked at this a little early relative to the XLE and crude oil. This was really showing itself, and the scanner had picked this out. Okay, well, we're trading above profiles here. We got a chance to get long. We actually got a really good focal point on this, also around 77 down here, as we had pulled back. Remember, we always want to, in situations where we're trying to buy relative strength, we want to buy breakouts and buy support. So here was the breakout, and here's another support situation. And this was kind of Custer's last stance on this around 77, just kind of going through the education. We reached the low of 77.95. Now we're just kind of mulling around up here around this inflection point at the top of this fair auction. I know we've kind of breached it a few times, but we're going to look at this as consolidation to possibly move higher. Now, crude oil would obviously help that, but you got to consider where you're going to put your stops. Long-term stops need to be below 77.77, and intermediate stops are going to have to, if we do kind of get up here and start moving forward, are going to have to be below this 83.34 in APC. Let's take a look at ExxonMobil. This is something else we were looking at really heavily from the long side, above this, and waiting for it to get back above the 89.49 area. Targets above are going to be 93.35, but what do you do now? That's a weekly chart. Here's our daily, and stops are going to have to be below that 89 general area on this, and I'm just going to keep looking at it this way. Let's take a look at Halliburton. All right. We talked about trying to catch a bid above 39.29 and then some targets above. We've met those targets already. 43.45. That's the weekly. Here's the daily. 41.61 is where I'd put my stops on this one from the long side. I know that's giving back about 2 points there and a little bit below on the stop scene. But I think Halliburton could possibly move even higher. So that's the way we're looking at Halliburton. Let's take a look at Schlumberger. That's the daily. Here's the weekly. We've met some targets above. The XLE is kind of at that 80. That may be a stopping point. But again, I think you got to take a look at this, not from the short side, because crude oil, I think, may move a little higher. And we're just kind of looking at some of these oils. And these things on the scanner had showed themselves a lot earlier than that crude oil pop. So what I want to do here is go into a couple more. Noble Energy, NBL. And, this is one, if you're going to buy this 45.75, you got a chance to place stops below there. I think this thing could move a little higher. We've actually had a good move up in Noble Energy. I don't like the way it's reversed that quickly, but Again, this thing showed itself a little early relative to, this is our weekly on Noble Energy. And the good news is that we've kind of closed above and pulled back to support again, 45.75. You may get another pop and a chance to, make 5 or 6 points in this, possibly. I wouldn't give these oil stocks a big long-term view right now because crude oil could settle back, but I think crude oil may move a little higher in the short run. Going to take a look at a couple more. OXY, and the reason I'm looking at OXY, I'm looking at the scanner and I'm pulling up OXY, Occidental Petroleum, and I'm seeing that, this is still below profiles on our weekly, below that 82.92. And as you can see, I'm going to pull this up. Here's our landscape view. This has got some more headwinds to get through, and if you're going to try to pick something that, I know this thing's bounced a little bit here, but we've got some resistance around 82.93. I think you could pick a little bit better of a long situation. And 82.93 also has that daily profile sitting up here, so we're going to kind of look at this as we've got better opportunities to go long. Valero, we're going to pull that up really quick. VLO, again, we're at the top of the box here on VLO. Really was a cool situation when we closed above and retested on the weekly, but what do you do now? Here's the situation on VLO, and that showed itself very early. Back on the 46 area, and we're trading we almost traded 10 points higher on that, and that's what, a 25% move in VLO. This is something that I think we've gone a long ways pretty quick on this, and you've probably got a little bit better opportunities with some other stocks, even though on the relative strength scale, it's actually from a price standpoint, it's showing itself strength. But right now you've got a profile that you got to deal with. It's a relatively wide profile, and you could see some profit taking, especially after that move yesterday. Open up, close below, and we may just kind of drift around here on VLO. We got to take a look at PSX also. I'm going to pull this up on the scanner so you can see it. PSX. And here we go. Type that in wrong. Here we go. I wouldn't buy this until we had pullbacks into 73.61. That'll be the close above profiles on the weekly and come back and retest the top. So I'd sit tight on PSX, and that's what I would consider the buy point there. We got to take a look at gold really quick before the next break. Let me do that for you. 1236 as it stands right now. And we talked about the 1234 area being something that is going to have to hold and not to really do anything since we broke down below 1267. Some stops got hit. I was looking at that from the long side and continuation possibly higher. But now that we've broken down, this is kind of the Maginot line now for the longs. And I'm still not looking at this from the short side. So we're looking at that as possibly a chance to get long with stops down below 1234 based on your appetite for risk on gold. We're going to take a look at beans because this is something I watch intensely, but I know a lot of people out there aren't trading grains, but I'm going to just kind of throw some things out there with this. My opinion on beans is, as it has been since we started talking about that at 1050 on the short side, that was based on some fundamental news and a report. And trying to find inflection points. As you can see, last week we found one around that $10 a bushel area, which was previous unfair lows, current unfair highs, and then we've got a new profile that's appeared down here. 981 is going to be the resistance area, in my opinion, to continue to sell, and then 963 is your targets down below and possibly even lower on March beans. I'm going to take a look at a couple of stocks that are in the news and earnings related right now. Let's see. Excuse me. People text me all morning here. All right. Obviously got some news out after the close yesterday on a company that's always in every mall I've ever seen here. Trading above $3 right now per share. So that's above 285. So 285 on Aeropostal, I hope I'm saying that right, is going to be the support area on this particular stock. Obviously, we talk about trading, not trading before announcements and waiting for the reaction to happen instead of trading the action. 285 is going to be support on ARO. And if we get back down below there, I think this thing's just going to continue to settle down. But right now, that's going to be support on ARO. Also, another mall store. Gap. Let me look at something here really quick. Sorry guys, I'm having let's see. Have I got the symbol wrong on that? Why is it not coming up? Hold on. Huh. Oh, GPS. I'm sorry. God, what was I thinking? Oh, I typed in gap. I'm sorry. All right. We've had some earnings announcements come out this morning. Here's the situation on the daily on Gap. Yesterday's close, 41.10. We're trading about, looks like 40.76, 40. Let me see here where we're trading this morning. Around 40.76. Actually, Gap has not opened. All right. 41.45 is going to be the major inflection point to pay attention to on this. If we can't close back above there during the day, this is, in my opinion, possibly going to be a sell with resistance around 41.45. Also want to show you guys, this is something that that last week or the week before we spoke at. There's me, there's Steve Dahl, there's me up there. This is the Bloomberg facility. If you've never, I invited you guys to go up there. You're always welcome to go to these Bloomberg events. What a facility, second to none. There's Steve. And I think they own the whole building on Lexington, 731 Lexington. And they've got great food, great alcohol, great coffee. And if you ever get a chance to go to those, you're always invited. And it's a very nice situation that Bloomberg puts on for us. Get rid of Gap. Let's go into Urban Outfitters. Let me just make sure I type this in right instead of typing in the actual name. Pre-market, looks like we're trading about 39. Had some action after the close. So what do we do here? We're trading above daily profiles, 36.99. If we get any pullbacks into 36.99, that's going to be support. I don't know if you could buy this on the breakout as it stands right now from a pure breakout standpoint. There's the weekly on Urban Outfitters. Let's take a look at the dollar really quick before we go to break. Obviously, a little inversely related to the euro. Talked about the 93.67 area. I still like this from the long side. That was a good buy point with stops around it. Here's the 240s. Short-term traders have 94.92 and 94.54 down below. But again, I'm looking at this from the long side and trying to block out the short side on the dollar still. Short-term stops below 94.54 to be stingy. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Excuse me. And I'm trying to pull up Caterpillar here. Let me just make sure we got the right. God, man, I'm having trouble. Okay, and here's Caterpillar. We were talking a while back, about letting somebody else kind of pick the floor down here with Caterpillar, as we had some earnings type announcements and move downs that we had before. Here's that orange bar this week. may have a new weekly profile, and here's the daily situation. We talked about, as we had gapped down that day, letting somebody else try to catch the sword. And we found a profile appearing after that orange bar on the daily, and that was around 79.67. Now you've got a new support area as we broke out above. It's been one of the best performing stocks in the Dow lately. 82.23 is going to be the stops oriented around Caterpillar now. And if you're looking at the scanner, this has been something that's provided these inflection points all along the way. And when this new profile attempted to appear the following day after the orange bar, this also was a notification on Caterpillar. We got to look at my favorite here. My favorite is short. IBM. And as you can tell, this, I'm not saying short this and give it to your grandkids, but this has been something. It seems like to me, there's going to be short squeezes every once in a while, but it seems to me, and here's the Maginot line right now, the new fence, 155.90, well, still the fence. This is not got a lot of upside potential fundamentally or technically right now, considering what the market's been doing and what IBM's been doing. So, again, I'm trying to, pick shorts, not in a very aggressive manner, but just below 155.90. I know we've kind of breached that and gone back above, and IBM is a Dow stock, and it's going to have some market relevance to some degree sometimes. But again, this is kind of how I'm looking at IBM as still a short candidate. Even though the market's been climbing lately, it's kind of been shelving off here. And this is something that I'm paying attention to from the short side, if you're looking for candidates to short. All right, before we get into the last minute here, I want to also pull up, where did I have that? Okay, I want to look at the financials. And here's the situation of the financials. Promised you a new box appearing this week. That's happened. New supply area happening here. 2402 was the close yesterday. Trading 2422 pre-market. Obviously, this kind of breached some of the inflection points that I was counting on holding. I still don't like this as a long. You've got a lot of mitigating factors to this, even though the 10-year has sold off, and that's kind of what these financials are looking towards, to hopefully widen up the spread on the yield curve so they can make more money. Still don't like this, actually. And if you want to take a look at some of the internals here, JP Morgan, obviously these have popped based on that 10-year. They've come back down to support on the daily, but still don't think that these are possibly the best play from the long side. Taking a look at the 10-year relative to that, got about 10 seconds. This is kind of a sit tight situation. Tried to pick about 129.13, didn't work out on the long side, and now the next inflection point from a major standpoint is around 127.27. Thanks, guys. Steve Rhodes is next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.